Hey guys, David Robinson here. Welcome to the apartment investing journey. As usual, we've got another great guest for you today. I'm really excited to have Juan Vargas with us. Juan, how you doing today?
Hey, I'm doing great. Thank you so much, David. It's my pleasure to be on your show.
So Juan has been involved in multifamily since 2016 and has been involved as a single owner in personal deals, as well as syndications as a limited partner and syndications as a general partner. He's a managing partner and founder of Gen Wealth Capital Group, where he and his team focuses on value add multifamily in the Austin and Houston, Texas markets. Obviously, Juan, that's a very brief bio, and our podcast is all about the journey. And so we'd love for you to back up and tell us a little bit about your backstory. What were you doing before you got into real estate professionally? And then, how did you get started in this space?
Yeah, definitely. So I guess I'll start from the very beginning. With my parents. My parents are immigrants, came to the States. My dad taught me the value of hard work. Hard work with your hands, your labor. And naturally, I became good with my hands. I decided coming out of high school that I wanted to go focus on what I was good at, and that was cars. That was just welding, all these different things that I did, growing up with my dad. I ended up going to work for BMW. I did that for many years, and both on working with customers, on the vehicle side, and just kind of well rounded there. And as any career, any W2 career, there's a ceiling, and I felt that I was always hitting that ceiling, and I wanted to find different ways to be able to supplement my income, so that I wouldn't have to be just necessarily stuck there, right? So I looked at multiple different asset classes. My mind, my heart kept going back to real estate. I think partly because my dad was in real estate as well growing up, and he still is today. And so I did some research. I felt that the lowest and easiest for me at that time was single family. So I got into single family, did a little bit there. But once one of my residents left, I realized that counting on one resident or one tenant was not the way to go for me. And shortly after that, I purchased my first multifamily property, and this is back in 2016. And didn't look back. So sold the single family, and then just stayed focused on the multifamily, and yeah, it just made it more of a focus and more of a career. Now.
You mentioned that your dad was in real estate as well. What did he focus on? What was his world like from a real estate perspective?
Yeah, so he was in single family. So he has some rentals. He has some rentals here in the States, but also back at home in Mexico. And then in addition to that, he's had like land, so land banking. He's had some commercial properties even today. So he's been pretty creative and strategic in how he does his real estate deals, and I learned some things from him. But one of the major items that I learned specifically was not to be a one man show, in which my
Mm-hmm.
dad was. Right, he did well, and he's doing well, but he's focusing a lot of these tasks by himself, right? And in the multifamily world, and that's the beauty of it, is you get to have a solid team, and guys that you can count on, guys or gals that you can count on, and all work together for a common
Mm-hmm.
goal. And that's really like what I love, and what I admire about the business. One of the major pieces, right? And so that was the key difference, there.
I love that, and I want to dive into that here in a little bit, and maybe go a little bit deeper on that concept. But let's talk a little bit about that first multifamily that you bought. You bought that
Sure.
first single family. You're looking for a way to maybe supplement, what your W-2 career could provide. Maybe you saw a ceiling of achievement there and decided, hey, how can I supplement, not only supplement my income, but is there a potential path for me out of my W-2? So I assume that you bought the single family while you were still working at BMW. Is that correct?
Yes, that is correct. I bought single family while still working there, and in my mind at that point, I was thinking, hey, look, this is my goal. This is my path. I just need to get to 50 or 60 of these, eventually, and then I'm done.
And
but that
did you
didn't
think
happen.
in your mind that you were going to continue to work your W-2 job and career and invest on the side and build up a portfolio that way? Or did you see yourself wanting to exit your career, your professional career, and move full time into real estate investing? What was your mindset back then?
Yes. So my mindset back then was to stay there and accumulate as many single family homes as possible, and then get to a point where, hey, look, my cash flow coming in is is almost as equal to my career there, and then exit at that point and focus full time, right? Um, but it was never to like, hey, get to 60 homes and it's still working here, 20 or 30 years later, right? That was never really the goal for me. I think partly because I was just tired and just ready for a change. But I just really
Mhm.
had this new passion for real estate that I really wanted to make sure that I focus on and really do the best I can, right? And that's swing for the bases, right? And if not, don't give 25%, give it 100%, right?
Yeah. And so, you bought that first single family property and you had a tenant vacate and you realized, oh my goodness, I'm 100% vacant now. Um, so did you ever buy any other single family or was it just that one that shook you up and forced you to move into multifamily?
Yeah, no. So we had a couple, and that was the one that was the turning point, if you will. The light bulb has been turned on, right? And so, but yes, you're correct. And then for that property or for both properties, but specifically for this one, we had a separate account, right? And that was like where the cash flow goes into, right? So that's after you're covering all your expenses or your mortgage and all these things, and obviously the resident's covering the utilities. Well, when you don't have a resident, then you're covering the utilities, you're covering the mortgage, right? So this account that you had over here is like back over here to these expenses, and then it's like very little here. So then you're thinking, okay, well, how long can I keep doing this, right? If I keep relying on one person, and yeah, sure enough, I was like, you know what? I was already kind of like studying multifamily anyway at that time, but I was like, yeah,
That put
this
you
is
over
it.
the edge, huh?
That put me over the edge. That was the turning point for me. Yeah.
And so you bought that first multifamily property in 2016. Just give us a sense of what it was. What size was it, and how did you find it? Just a little bit about that.
Sure, sure. So that was a 32 unit. And the way I acquired it was through direct mail. Direct mail does work, guys. Anybody listening, it works. You don't have to go straight to brokers. Actually, without getting too far off the subject, I actually just closed on another smaller property, a personal property. It's a 20 unit, just myself and my wife, right? And that was through direct mail as well, right? So it definitely works. But yes, the 32 unit was a property that was not too far from my home, and it was a couple that was just ready for retirement. And a lot of times, it comes to timing, right? You could send them a letter now, and they're not ready 6 months from now. They're ready, right? And so it was a property that we acquired for $1 million, 32 units, and it was built in the 90s, and it had it was just all classic units, and just the owners, they did a good overall job, but they focused more on keeping it fully occupied versus really improving the property, if you will. And so we went in there and really came up with a good business plan and improved the property and increase rent and just increase the value overall.
And was this in your backyard in Austin or Houston or what? Where was this located?
Yeah. So I grew up in Houston,
Mm.
born and raised in the Houston area, and so this property was about 30 minutes from my actual home, my house. Yeah. So it was, yeah, in the Houston area.
And do you still own it today?
No, no. So I had a little bit of a seller's remorse. I'm not gonna lie. So I had a little bit of seller's remorse, after I sold it. Maybe like a year, 6 months to a year later, I was like, man, I should have just kept the property because I thought about refinancing it,
Mm.
and it didn't happen. But still, I was able to make some money and create and make that money grow even further, right? But still, it would have been good to have a little property just to refi, right? But I didn't buy that property myself. I did have a partner, so that was part of the reason. But yeah, if you can refi and hold for a long term and just use those proceeds, tax free and keep climbing up, then I think that's one of the most powerful strategies you can do. Or if you sell then 1031 into something else, those one of those two. I
Yeah.
think if you're a single owner, or even if you have if you're a syndication, it just becomes a little bit tougher to do. So.
Yeah. And so you've since gotten involved in larger multifamily acquisitions, in syndicating deals, raising equity from limited partners to buy larger commercial multifamily. Tell us a little bit about that transition from, buying the first 32 unit with you and a partner, I'm assuming as a joint venture, and then
Mhm.
eventually getting to a point where you're building a team and a business around large commercial multifamily acquisitions. Maybe bridge the gap for us there, and what did that process look like for you?
Sure. So I started off with a 32 unit. I learned as much as I could, and it was great because I got to roll up my sleeves and really put my own money into it, right? And so any mistakes that we made, it was on us. And so I felt that really gave me the confidence in going after some of these larger properties. And so I tried that actually. As soon as I had this 32 unit, I tried that, but then it was still a little challenging because I didn't have the experience in larger properties, and so the way that I got into larger properties was actually partnering with others that are already in the space and kind of leveraging their experience and bringing something to the table, right? That they needed, right? So and there's multiple ways that you could do that, but I help with equity raise, specifically, and so was able to get into a couple of deals that way. And that gave me even more experience and more credibility and more leverage whenever I started to look for my own, which was a couple of deals later. So that was sort of the gap, right? Bridging the gap was like going for my property, gave me credibility to get into and partner with other guys that are already in the space. I brought them some added value, right, that they needed, and then that sort of bridged the gap for me to get into my own deals and just kind of go from there. And then also I invested passively in some deals just to be able to see a couple of reasons, right? Number one, you're investing always for a return, right? So number one, right? So that was the number one goal for me, investing for a return. But then also number two was really like taking a look behind the curtain, with ABC operator and seeing how they're doing things and really understanding why they decided to go this route versus that route, and just understanding like the reports, and that really helped me to become a more well-rounded operator myself, taking things that I like from some of the guys, and things that I didn't so much care for from other guys, and just becoming a better operator and general partner overall. So I think for folks out there listening, I think if you can do combination of one of these that I mentioned, bringing something to the table, invested passively, or buying your own deals, one of those combination, or all three if you can, then if your goal is to become a sponsor or general partner one day, then I think those will really give you credibility and really help you to become more confident and give you the skill sets that you will need to get to that next level and be successful, most importantly.
Yeah, I love that. I think it's a great strategy to, work your way into the general partnership side of the business and becoming eventually a lead sponsor. Um, I do want to talk a little bit about that time frame where you decided to partner with other lead sponsors and bring value into their world. How did you meet your partners on those first few deals where you were a co-general partner?
Yeah. So on those first couple of deals, I actually had met these guys when, like, right before I closed on that 32 unit. So I met
Mhm.
these guys, and then it was kind of sort of happened at the same time, right? So I got the experience from that 32 unit, and actually was able to partner with them on those larger deals while I still had my 32 unit, and I sold it afterwards. But yeah, so the relationship was already there, and it was just a matter of like the right opportunity, coming forward, right? So I think that kind of goes back to conversation of relationships. It's always best to have those early on before you actually need those relationships, right? Or actually looking for something, right? Because was it beneficial for me? Of course it was, right? Was it beneficial for them? Yes, of course it was. But it's just that relationship, goes back, further than just one deal, right? And so I think it's key to have those, and really, that's why the second one happened, right? And that's why today, these guys that talk to me very well, I see them all the time. We go to their meetups, they invite me to be a speaker in their meetups, and vice versa, right? So it just the relationships are key.
And you mentioned that part of your role as a co-GP with these partners on those first few deals was bringing some equity to the table. What was that process like for you? Your first experience in raising equity for a larger commercial acquisition. What was that like? Where did your investors come from? What was your experience like? And maybe you could share some insight with our listeners that are about to, work on their own first capital raise for a deal.
Sure. So I didn't know what to expect, right? And one of the easiest ways, for me at that time was like, hey, you know what, I can either do this or this, right? And raising equity was one of those pieces. I just wasn't sure how I could perform, right? And that's one of the things, right? When you're raising equity, I think most people out there, they're a little overconfident in with what they really can raise at the end, right? And so I felt that I could do $1 million, right, or maybe even higher than that. And so that was just my overconfidence. And it's always good to be confident. Not saying that it isn't, but I ended up raising a little over 500 grand on my first one. It was like 550 or something like that, right? And the folks that I raised it from was friends, family, neighbors, just people that really trusted me as a person, but hadn't yet developed the trust in me as a multifamily guy, right? And so they put their trust in me. They invested through me, and the second one was sort of in that same range. I think it was a little bit higher than that, but sort of in that same range. And I was like, okay, well, there's a couple of deals that I've kind of I have some confidence in. How do I get to the next level, right? And get to $1 million or go higher from there. But those those two were really the stepping stones for me to feel a little confidence and knowing that I can do it. And it's I guess the most important thing there is having proper communication with them and make sure you perform, right? At the end of the day, that's putting the trust in you, and you got to make sure that you perform as best possible. So, but yeah, that's a little bit of a description of my database, or at that time, right?
And so mainly came from friends and family. That was your main source of equity at that point. Is that correct?
Yeah, friends, family, ex colleagues, or
Sure.
or even neighbors, like a couple of my like literally like neighbors, right? So that
turning over every stone at that point in time.
You have to, right? So whatever you can to get the job done. You have to turn over as many as possible, and then the guys that turned you down the first time or the second time, they eventually will start to see you. Hey, look, this guy's legit, and hey, I'll invest in your next deal, right? So that's kind of how things started, going from there.
And so when was it that you decided, hey, you know what? I feel like I've got enough experience under my belt. I understand how this process works. I really want to start to play the role of lead sponsor. And then really building out, your company, Gen Wealth Capital Group. Like, when was it in that, progression where you decided, hey, I really want to sort of formalize this business and attack this by going after my own deals? And I am making an assumption that is the direction that you went, where you wanted to become a lead sponsor. I don't want to make that assumption. So maybe you can clarify what your business looks like today.
Sure. So the goal for that was actually from the very beginning, right? From the very beginning, I had goals and to get to a point where we're doing our own deals. But I knew that I had to start with what I had at that moment and the skill sets and experience that I had at that moment. And that was including that 32 unit, right? But yes, from the very very beginning, I felt that I had the vision and the goals to get there. What we're doing today, just to fast forward a little bit, is we've closed on deals in Dallas and Houston and Austin and Phoenix, and and also deals that have JV'd on or in Atlanta. And so, really, today what we're looking for is value add opportunities that are 150 units, 200 units and above, in either Houston or Austin. Houston because we're located here, we know the market very well. Austin because it's right down the road, and it has a lot of upside. I believe so. And just solid value add, B deals and above really. And so, I have two partners, that we have joined forces and really looking to really grow the business as best possible and be able to provide investors with some great risk adjusted returns.
And so you have two partners in your business today. You guys are focused on the Dallas, Houston, Austin, Phoenix markets, with an emphasis on Houston and Dallas. What role do each of the partners play in your business at this point? Is it sort of all hands on deck? We're sort of all attacking, every aspect of the business. Have you sort of separated responsibilities and focus? What does that look like for you?
Yeah, sure. So myself, I try to focus on the front end, focus on, acquisitions, broker relationships. We all have equity, role in equity and raising equity. And then also in the ongoing asset management, you just kind of oversee that, right? One of my partners, he's the numbers guy, right? Not that I'm bad at numbers, but he's just like great at numbers, right? And so he's the one that's like, digs into the spreadsheets and just loves that and has, he's got the engineer mindset, right? And he's just, going to every single detail, and systems and processes and all that good stuff. And another partner is more on, he's more of the equity, but he's also construction. He's got a good construction background, and he's done deals, ground up deals himself, and so he really digs into that. And so we all sort of divide and conquer, and have been able to really make it a success.
Yeah. And when did you guys formalize your business, in the sense of, hey, we're three partners and, we're going to go and attack this thing together versus maybe doing some loose, joint venture type deals or, hey, let's work on this deal together. When did that happen and why did you decide to go that route versus maybe saying, hey, let's work on deals together. We'll keep our own businesses separate. Let's keep, and we'll all have our different roles and we'll joint venture deal by deal. So two questions, I guess. Number one is when did that happen? And two, why did it happen? What was it about that pulled you to formalize that business entity and that structure?
Yeah, so a couple answers there, right? So the first answer is, it happened after we had a deal together. So we JV'd on the deal. We understood each other. We were able to really understand and each other's skill sets. Really count on each other. Really trust each other, and know that, hey, you're gonna do what you say because I've every single time that you've had a task or responsibility, you've been there, and so you earn that trust, right? And so it was after we did one deal together, we JV'd, then we was like, okay, let's maybe work on this, together and formalize. So why was, I've already mentioned part of the reason why we really felt trust in each other. We had complementary skill sets. But another reason for me personally was because I had JV'd on several deals. I've been a JV partner on multiple deals, and the challenging part with that, for everybody out there that's looking at JV and looking to get your first couple of deals, the challenging part with that is that you have multiple partners, and it's hard to scale with these same partners unless you're going to be doing multiple deals and you all agreed on. It's hard to really put systems in place and have one common entity, or location or I guess face, if you will, right? Mm-hmm. One brand. And it just makes it challenging for capital raise. It makes it challenging for debt, for vendors. It just you name it. It just makes it more challenging, and you're able to really gain the scale if you join forces. be able to hire within, right? It's everybody splitting the cost, and really hire team members and be able to grow that way. So there's multiple, reasons, and those are like the biggest ones I would say. But definitely I would say that, before you get there, it's very important that you sort of date, and really find out, if you can really count on each other, and and really try to have some experience, like that you can know what to look for in a partner, right? Like, because the more experience that you have, the more that you know what you're good at, right? And the more that you know what somebody else needs to bring, because you're not that good at that specific area, right? So you need to know what you need, not just because you like somebody, right? You need to know what you need, and you need to know what you can bring to the table. So it's very important that personalities fit, but also skill sets and availability, and just multiple reasons, right? So it's a very, very sensitive subject, and it's a very, I guess, important subject that everybody, should cross. Now, it's not for everybody, right? I have buddies that prefer not to, formalize, because they would rather, JV in multiple deals, and then be able to have more flexibility, in their lifestyle.
Yeah.
And not to report to anybody else, and that sort of stuff. So, if they want to be gone on vacation for a month, and then so be it,
Yeah.
Yeah.
Do you guys have sort of any like cadence of accountability within your team at this point? Because when you alluded to this, when you're joint venturing, yes, you're working to the common goal for that particular deal. But outside of that common goal of executing on the business plan, you have a lot of flexibility, and you're as far as time and expectations and goals outside of that specific deal, those are just yours personally. What does the accountability look like inside of your partnership with your other two partners? Maybe just on a weekly basis, on a weekly or a monthly basis. What does that look like for your team? How often are you communicating, and what are the expectations amongst all the partners? It's a
Yeah.
general question, but I'm just curious.
Yeah, no, it's a great question though, right? Because it's important for everybody to really understand what sort of behind the scenes, what's going on, right? Um, and I think it kind of goes back to having a common goal, right, or goals, right? If you're working with guys that, hey, I'm okay with just getting 5 deals and then just riding out there into the sunset, and but you want to get to, X amount of deals, and provide, returns for X amount of investors, and then it's not going to work, right? It's two different. Is the alignment's not there, right? So number one, have the alignment needs to be there, right? Alignment of interest has to be there for everybody, and then that really will set you in the communication, because everybody has that desire, everybody has that motivation, and everybody's hungry to keep pushing, right? So for us, we communicate on a daily, right? And
Mm.
so where it kind of slows down a little bit, it's like on a Sunday, where even on a Sunday we'll communicate. There'll be a couple of little communications, but we try to leave like Sundays like family, right? Like it's like,
Hmm.
unless something important, we don't mess with it, right? Because it's like I'm dedicating my time to my family, kids, if you have kids. But Monday through Friday, and Saturdays, I would say half of Saturday is dedicated to, we're communicating on a daily, and we use technology to our advantage, right? There's multiple different channels that you can do. There's Slack, there's Teams, there's Google. We use Teams, and it just keeps everybody in check. It keeps everybody, up to speed on what's going on, what the latest is. We set goals, we set tasks, and so we have to be able to, and we set timelines. So you have to be able to hit those, and everybody knows if you hit it or not. So we're counting on you, right? You're responsible for this, and you got to make sure you take care of it. So that's a high level. So without
Yeah.
going, I guess, into too much detail, but it's high level, and phone calls, texts, Teams, communication, just all these things, and sharing files, and it's very important that you stay communicating as clear as possible. And that's the same thing, without going off too much. Same thing with relationships with your family, right? It's communication. Same thing with relationship with your spouse. It's communication. Well, team members or partners is no different. You need communication to be able to be successful.
Yeah, love it. Thanks for going into a little bit of detail there, and giving us some insight into, how you guys have formalized your business and the roles that you play and how you communicate. I want to start winding our conversation down a bit, but I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
The biggest challenge that I'm facing right now is, I mean, I think I think the majority of the people out there will really agree is just the deal flow, right? Well, actually, I'll take it back. It's not the deal flow itself. It's making sure that the deals pencil and actually, getting those deals awarded to us because it's so competitive out there. So I think that's the challenging part is cap rates have compressed so much. Cash on cash returns yield has really decreased significantly, and so for you to sort of hit those same expected returns with those compressed cap rates, every increasingly difficult to be able to pencil out a deal and much less win a deal. So that's the biggest challenge, I would say, and that's really what drives the business. It's like the deals on the front end, the deal in equity, right? Are it's on the front end. But if you don't have the deals, then the equity could be there, and then you're
Yeah.
not gonna be able to provide them with an opportunity, right? So I would say that's the biggest challenge right now at the moment.
And, it's a balancing act between being patient and sticking to your criteria versus, getting a deal. And do you have any thoughts on how you combat the challenges that you face in deal flow? I mean, do you lighten up your underwriting slightly? Do you go to different markets, or do you just sit back and be patient? And if you buy something, you buy something. If you don't, and it doesn't pencil, you don't. What does that look like? How do you combat that?
Yeah, so for us, we want to, I've been in several markets, right, in the past. Um, but I think it kind of goes back to the conversation that we had with the team, right? Formalizing. I think, once you do that, then you're able to really scale. Well, if you're focusing on multiple different markets, it doesn't really help you scale either, right? Yes, your number of deals that you've done, can help you, uh, and the number of investors you provided opportunities for can increase, but you're not really becoming an expert in your market. You're not really knowing every single broker. You're not really knowing the streets and the submarkets and and how many units came online and how many are set to come on next year and how many people moved in and what the job reports are like. You're not really becoming an expert. So for me, going into other markets, it's not a goal for myself. It's not a preference. I will stick with Houston and Austin. I know these markets very well. Can become more of an expert. Not saying that I am, but can potentially become an expert. And really build some good, solid relationships with the brokers who are the ones that are going to be seeing your deals, as opposed to like you're calling a broker named Billy Bob, that you just met over the internet, right? And you give him a call, and you don't have that connection because he knows that you live in Texas and you're trying to buy in Florida or whatever, right? So I think for us it's that as far as markets, as far as underwriting, what do we do there to try to get closer to win the deal? I think that you know historically we've always been as conservative as possible. I think that if you try to win a deal today, you have to be able to turn the knob a little bit and be a little bit more aggressive. You have to be able to pull that lever and get a little bit sweaty, if you will, and have conviction. Because if you don't, you're not going to win anything. It's just not going to happen. And
Mm,
so you have to really trust yourself, really understand, and look at the fundamentals. At the end of the day, it's about the fundamentals, right? Supply and demand. How many jobs are here? How many people are coming in? And if you have that and you don't have enough supply, then I think you'll be in a overall good position. And yes, things can happen in the market where it can shift and against your maybe against your favor, but it's still an important asset class that's needed, and it's never gonna go to zero. I will tell you that it's just never gonna go to zero. It still has land value, and occupancy will likely not go to zero unless you burn the whole place down, right? Or it
right.
gets hit by a hurricane, right? So you just gotta have conviction. Just be willing to turn the knob a little bit if you have to, and and just have a little bit more conviction. Because, like I said, if you don't, then your chance is going to be slim.
Yeah, great insight. Last question I've got for you. What's something that you're doing right now in your business that you're just absolutely crushing? You're just knocking it out of the park. Something that we could learn from.
Yeah, I would say that we've been able to really increase our investor database.
Mhm.
Investors that are interested in investing with us. Through outreach or just investors reaching out to us, or referrals. And I think that's been it's been exciting, right, to see that. We just got to be able to provide them with the opportunities, but it's exciting to I think once you start getting some experience and track record, I think it does come around. But you have to be able to start somewhere, right? And so, I think a lot of people, they want to start at the top because they see everybody at a certain level. And it's like, maybe somebody else is already at chapter 7 or 8 and you're barely at chapter 1 or 2. You'll get to chapter 7 or 8, but just keep reading.
Yeah.
And so, I think people starting out, they want to be there already. They want to finish the book. It's like, dude, you got to open the book first, and start reading first, before you finish it.
And outside of referrals, from past investors or, friends and family, outside of the referrals, what's your best source for attracting investors to your business?
Social media.
Mm.
Social media is has been very helpful. I also host a meetup. Been doing it for many years, and it's just about being consistent. So I have several new people that attend on a weekly, and so you just got to put in the time and the effort, right? And so I think those are helpful. But as far as number and scale, I would say has to be social media, right? But like the meetings are very helpful because you're able to meet in person and you have more of a genuine connection. So it's a combination of both, I would say.
Yeah, love it. Well, Juan, this has been a great conversation. We've covered a lot of ground here. I appreciate you sharing your journey about how you were working in your W-2 career with BMW, and were inspired by your dad's experience in real estate to go out and buy your first single family home, and ultimately how you decided, hey, you know what? I don't like this thing where if I have a tenant leave, I'm 100% vacant. Let's go try this multifamily piece out. And how you've just, progressively gotten deeper and deeper into the space and scaled up from investing as a limited partner to doing a joint venture deal on a smaller commercial multifamily to eventually partnering on large commercial multifamily with other experienced operators, and then eventually, deciding to become a lead sponsor yourself and partnering and building a very successful business. It's been great to hear about your journey and your story, and thank you for sharing some insights. What's the best way for our listeners to connect with you and learn more about what you guys have going on?
Well, David, I just want to say real quick, it's my pleasure to be here on your show. Thank you so much for having me and being able to share my story, right? Yeah. So if you'd like to learn a little bit more about what we do, go to genwealthcapital.com. It's our website, and or follow me on social media. Just make sure that you mention David's show, and we'll be able to connect there. So Instagram, Twitter, Facebook, LinkedIn, all over the place. So yeah.
Great. And we'll have links to that in the show notes, genwealthcapital.com. And you can find Juan on almost all the social media channels at the Juan Vargas. And so, Juan, again, thank you for coming on. Thank you for sharing your journey with us. And I look forward to connecting with you again soon.
Likewise. Thank you so much, David. Appreciate the opportunity.